Financials is shorthand for the financial sector of the stock market, also called the banking sector. Here we'll look at the best financials ETFs. Why would we be interested in financials? Companies in the financial sector, as the name suggests, are banks, finance companies, investment companies, and insurance providers that offer financial products and services to commercial and retail customers. Many think of Wall Street, but the financial sector is much broader. Household names include Bank of America, Citigroup, Wells Fargo, American Express, etc. Subtypes of financials include retail or consumer banks, commercial or business banks, investment brokers, hedge funds, private equity firms, insurance providers, mortgage providers, tax services, and more. The financial sector is intrinsically tied to the health of the economy, as a major aspect is providing mortgages and loans to customers. It is said that a healthy economy requires a healthy financial sector and vice versa. A weak financial sector hurts consumers. The suffocation of these companies means fewer business loans, mortgages, and insurance at higher prices. Financials also tend to do well when interest rates rise, which may be why you'd be interested in them now. Government regulation is also a big part of the financial sector. An obvious example is the huge blow to the financial sector and the global economy as a whole from the 2008 global financial crisis. Following this, the financial sector saw restructuring and increased regulation, and rightfully so. Here are some of the best financials ETFs. First up is XLF, the Financial Select Sector Spider Fund. XLF is the most popular ETF for this sector with over $18 billion in assets. The fund seeks to track the Financial Select Sector Index, providing broad diversified exposure to the US financial sector, touching every industry that we went over earlier. This ETF has 67 holdings and an expense ratio of 0.13%. Second on our list is VFH, the Vanguard Financials ETF. VFH is next in popularity with over $6 billion in assets. The fund seeks to track the MSCI US Investable Market Financials 2550 Index. With over 410 holdings, this ETF provides much broader diversification and comparatively more mid and small cap exposure than XLF. The fund is still market cap weighted, but doesn't have as much concentration in a small handful of companies. This ETF has an expense ratio of 0.10%. Next on our list is KRE, the Spider S&P Regional Banking ETF. Investors wanting to avoid big banks in favor of smaller regional banks will prefer KRE. The fund seeks to track the S&P Regional Bank Select Industry, an equal-weighted index of regional banks like First Republic Bank, Fifth Third Bancorp, PNC, and more. This ETF has 130 holdings and an expense ratio of 0.35%. Next on our list is IXG, the iShares Global Financials ETF. The earlier three ETFs only target US financial stocks. Those desiring global diversification can do so with IXG. The fund seeks to track the S&P Global Financials Sector Index. This ETF has 194 holdings and an expense ratio of 0.46%. What do you think of the financial sector? Does the recent prospect of rising interest rates have you considering adding some to your portfolio? Let me know in the comments. Thanks for watching. Some of the links below are referral links at no additional cost to you. If you choose to make a purchase or sign up for a service, after clicking through those links, I may receive a small commission. This allows me to continue producing high quality content on this channel and pays for the occasional cup of coffee. I have first-hand experience with every product or service I recommend, and I recommend them because I genuinely believe they are useful.